Markets are tumbling, headlines scream, trade war, and investors are panicking. But what if this chaos is actually your golden opportunity? In this video, we'll explore why Trump's new tariffs might be the perfect storm for savvy investors to capitalize on. Hey, I'm Robert, and this is The Alternative Investor. Today, we're diving into the recent tariff changes announced by President Trump and how they're shaking up the markets. More importantly, we'll discuss why this turmoil could present unique investment opportunities for those who know where to look. President Trump recently announced a sweeping set of tariff changes, including a 10% blanket tariff on all imports and targeted tariffs as high as 145% on goods from China. These tariffs are designed to protect domestic manufacturing and reduce reliance on foreign supply chains, but the market response has been anything but calm. We've seen broad volatility in equity markets, renewed inflation concerns, and a clear signal from investors that these policies will have near-term consequences. In the days following the announcement, the S&P 500 dropped by more than 3%, with large-cap tech companies like Apple and Microsoft experiencing sharp declines. The bond market also showed signs of stress as yields fluctuated on inflation fears. Meanwhile, traditional safe havens like gold and silver rallied, signaling a widespread flight to safety. This kind of reaction often reflects short-term panic more than long-term fundamentals, and that's where opportunity lies. Now let's talk about where the real upside might be. First, look at value stocks. Companies with solid fundamentals and strong balance sheets that have been unjustly sold off due to market-wide fear. These are often blue-chip names or overlooked mid-caps that suddenly become available at a discount. Second, consider domestic-focused businesses, companies that generate most of their revenue from within the United States and are less dependent on global supply chains. These businesses may actually benefit from reduced foreign competition as tariffs make imported goods more expensive. And finally, watch commodities and commodity producers. Assets like gold, copper, and industrial metals tend to perform well during times of inflation or geopolitical instability. As tariffs drive up prices and spark economic anxiety, demand for real assets tends to rise. One of the most successful strategies in times like this is contrarian investing. When panic hits the market, investors often overreact, dumping quality assets along with the weak ones. Historically, the greatest investors, people like Warren Buffett, Howard Marks, and John Templeton, have made their biggest moves in moments of fear. If you're willing to go against the crowd, and you've done your homework, this environment could offer you rare, asymmetric opportunities. So how can you take advantage of this moment without overexposing yourself to risk? Start by diversifying your portfolio. Don't concentrate too heavily in one sector. Spread your exposure across industries and asset classes to cushion potential volatility. Next, focus on quality companies. Look for businesses with strong cash flows, manageable debt, and pricing power, especially those that can pass increased costs on to consumers. And most importantly, stay informed and disciplined. Don't let fear or headlines dictate your decisions. Monitor developments in trade policy and macro indicators, but base your investments on long-term value, not short-term noise. Trump's tariff changes may have rattled the markets, but for smart investors, this could be one of the best setups we've seen all year. Uncertainty creates volatility, and volatility creates opportunity. This is your moment to position smartly, think long-term, and stay ahead of the panic. I'm Robert, and this is The Alternative Investor. If you found this video helpful, hit like, subscribe, and let me know in the comments. Are you buying the dip or sitting this one out?